This would be understandable had we not just gotten this big coronavirus scare. How does that play into your EM trade?
So basically, as I said previously, we think that this virus spreading is going to be contained eventually. We see that the government is putting a lot of effort, and we don't think that this virus is going to be as damaging as 17 years ago. So we think that actually the current weakness is typical, there's uncertainty and markets settle because they don't know what's happening. And actually, it is a good opportunity to add to emerging markets because we still believe in the long-term potential. Our 12-month view is not changed. We think that in 2020, emerging market growth is going to be better than developed markets. We see the earnings growth revision is going to be more positive. We think that emerging market central banks have more leeway to cut interest rates if they need to. We think that the valuations are more attractive versus developed economies. So we still see the attractiveness in emerging market equities, and we think that this weakness could be a potential buying opportunity.
Okay, and it'll take a while to establish whether this is the buying opportunity, will it? And where will that be then, Janet? Will it be in the likes of Thailand, places where we've seen heavy selling in response to the coronavirus fears?
Yeah, so basically, of course, the markets that are more heavily set up would be more attractive. But also we need to look at the fundamentals of the economies as well. And we still think that, Chinese equities are attractive. We like the exposures in the technology sector of China. We think that, despite what's happened with the virus spreading, I think those sectors could be oversold because we still believe that those companies can deliver superior earnings versus the other sectors. And we're watching any opportunity now because it's still quite uncertain at the moment. But we believe that at some point the news will turn slightly more positive as the virus case will start to be contained. Yeah.
What's your expectation for global growth this year, Janet, given the importance of China and emerging markets in driving that? What do you expect in 2020?
Yeah, so it's worth noting that actually we had been revising down growth forecasts pretty much the whole of last year, but at the end of the quarter, we started to upgrade our global growth forecast for 2020, and that's really because of the de-escalation and trade tension. We think that's really crucial in helping with the recovery in the manufacturing sector, which was heavily weakened in 2019. So our expectation is that global growth should see more green shoots this year, but still, it's really at a modest growth pace compared to historical basis, but steady and gradual, and the cycle continues into 2020.
And that assumes we don't see any further deterioration in the manufacturing sector then globally.
Yeah, of course. Yeah. That's our core belief. We think that this coronavirus impact is going to be temporary. If you look back in history, China GDP, it did dip from 11% in Q1 2003 to 9% in Q2 2003. But once it was contained, activity sharply rebounded, and it ended the year at 10% in Q4 and as a whole. So we do see that people are still going to spend. If they see that the situation is getting better, they will go out and spend. They will recoup what they wanted to buy. And we think that from the historical basis, there would be a rebound if things get contained.
Okay.